Nothing is certain but death and taxes. You will die and you will pay tax. If you get from point A to point B, whether your own car, buses, taxis, you will know about the fuel levy. If you have a sweet tooth like me, you'll know about the sugar taxes. If you partake in any of the sins, alcohol and tobacco, you'll know about the sin taxes. We pay VAT on our clothes, most of our foods. All of these forms of taxes do not equal as much as is collected from individual tax. Individuals in South Africa pay more in tax than VAT, customs, sin taxes, company tax, estate duty, the tax on when you die. So it's very important as individuals knowing that it's our money. The majority of the money that's earned for government to spend is coming directly out of our pockets, in addition to the VAT and everything else that we pay. Okay, so income tax is the tax on normal income. You need to understand that there's a very big difference between remuneration and taxable income. Taxable income is not only your salary, but you could one day have an investment property and then you earn rental income. You could earn interest income, you profits on a business that you're operating as a sole proprietor. All of these amounts are added together to determine taxable income. So you are not just taxed on your salary from actual work. You are taxed in a broader sense. So when you are working at a company, you'll normally pay your income tax in the form of PAYE, and that will be deducted from you, from your salary, and you'll get your net pay at the end of that. When you start earning income, maybe you an Uber driver as part-time and you're earning extra income from that, you will have to register as a provisional taxpayer, because now you are earning income that is not taxed by an employer. Provisional taxpayers have to pay top-up payments in August and in February each year. So in addition to the normal monthly PAYE that you might have deducted off your salary income, you're going to have to make top-up payments. But the biggest thing on all the examples I've done for you today that I want you to understand is you cannot calculate the tax that's due without determining your annual taxable income. Now, for today's examples, we're not taking into account any of the deductions to reduce taxable income, like if you contribute to a retirement annuity, if you make medical aid payments. Now, the main reason I wanted to go through the examples that I've chosen today is because as interns, you are getting stipend income that's not currently being taxed. And I want to explain to you why and how the payroll system works and how it's determined why it's not taxing you on that. I want you to understand that you're going to have to save, you are going to have to save towards having to pay in, but it's not the people that you're working for. There's nothing wrong with the payroll. They have done the calculations correctly, but you are going to have to save towards a tax bill at the end of the year. So, our Bible, you will see every year in the finance minister's budget speech, they do the updated, I can't see like that, is the tax table, our Bible. So the tax rates, the tax tables in the top, the tax thresholds and the tax rebates are decided by the finance department, and it's done in the budget speech every February. This is the Bible that all tax practitioners will use when determining what your tax is and when they do your tax calculation. So just a glossary of some of the terms that we're going to come to in today's session. A tax year for an individual, you cannot change that. Companies can have different tax years, June year end, February year end, so on. But an individual is always the 1st of March of one year to the 28th of February the next year, or 29th of February. So it's always 1st of March to 28th of February. The rebate amount, which is currently the 16,425, is again determined by the finance minister. And this is the amount that's considered tax-free. So when somebody says to you the tax-free portion of income, that is basically the tax threshold. Because if you took 91,000 times by 18% is that 16,400. That becomes a problem when you have multiple companies that you work for, because all of the companies will take into account that 16,425. That is just how the payroll system works. But you only get that once. It's an annual allowance. It's not a per employment allowance. Okay. So the rebate is basically determining what the tax threshold or what the tax-free portion of your salary is. Your marginal tax rate is the actual brackets that you'll end up falling in. So you'll see it starts at 18%, and then the part of your income from 226 to 353,000 is taxed at 26%, 31, 36, etc. But your average tax rate, because the tax brackets move and are taxed at different amounts, your average tax rate lands up being a lot less, and the fact that your first 91,250 is not taxed. There's no tax on that. So when somebody says to you, what is your marginal tax rate? It's the tax bracket you'll end up falling into, and your average tax rate would then be what your actual tax payment is going to be. Now, you can see from the tax table, it's very important why we have to get the annual income, because you can't determine what tax is going to be paid if you don't have the annual taxable income amount. You have to know what the total 12 months is going to be able to do the actual calculation. So we're going to go with our first example. This is just to show you how a payroll system works, okay? And again, why it's important to get your full 12 months annual income, and how the extrapolation works in a payroll system. So in our first example, we're starting with you starting mid-year. So individual A starts with the company on the 1st of June, and the monthly salary is 19,000 Rand. The payroll system doesn't take 19,000 and times it by 9 months from June to February, because that's going to put you in the wrong tax bracket of only 18%. And you'll see on all the slides, the tax bracket, the tax table is there. You have to have that to be able to determine what's going on in the actual calculation. So if we had to do the 9 months at the 19,000, it would only show annual income of 171,000, but that's not correct, and it would put the person in an 18% tax bracket. What the payroll system is going to do is say, you might only have started working here now, but you more than likely worked for a place with a similar income for the first 4 months of the year. So it's going to take your salary that you're getting, the 19,000, and times it by 12 months to determine what tax you're supposed to pay. It will then assume that the correct tax for the first 4 months of the year were deducted, and it will just tax you on your last 9 months. If you didn't work for the first 4 months, you will be getting a tax refund at the end of the year, because you would have paid more tax than your actual annual income, because then you would have fallen into the 18% tax bracket. Okay, so you have to submit your income tax return, and on the submission of your income tax return, then you will have an assessment which will show the refund. In all of your cases where you are working for multiple people and you're not at a fixed job from the 1st of March to the end of February, you will always have to submit a tax return because you've had multiple sources of income or multiple employers. If you get a travel allowance, you will have to submit an income tax return. So SARS has started a push the last 5 years, I would say it is, where they've advertised each year when you don't have to submit a tax return. So if you don't have a travel allowance, you don't claim medical deductions, you don't contribute to charitable organizations, all of those things that would reduce your taxable income, if you don't have that and you just earn your RP, you earn your salary and you get your RP5 from one place, you don't need to submit a tax return. SARS automatically assesses you, but always make sure you check that because they're not always 100% right. But it will only be on your actual tax return submission in July that it will show that refund. Okay, let's go back to this and explaining the rebate amount. So on your taxable, your tax table, from 0 to 226,000 is normally taxed at 18%, right? Your first 91 of that between 0 and 226 is your tax threshold amount. So that is non-taxable, well, not taxed. It's the amount that our lovely government gives us for free. So 91,000 of that first 226 is not taxed, or is taxed at 0%. So that is the rebate amount. If you look at the tax threshold of 91,000, if you times that by 18%, you would get the 16,425 rebate. So let's say now you earned the 171 in our next example. The first 91,000 is tax-free, and then only the portion over that would be the 18%, okay? If you had no tax deducted though, let's say now you've only earned 100,000 Rand. 91 of that, the payroll system would have seen that you shouldn't have paid tax on. You should have been taxed on the balance between the 91 and the 100,000. You will only be limited to the refund of that amount that you paid in tax. You won't be getting more based on that 16,000 Rand. SARS will not refund you that because you haven't actually paid it. Okay, so the rebate amount is not refunded. It helps to calculate what you should be refunded, but if that's the only amount and you've had no tax paid to SARS, they won't refund you. Because, so we're working with you youngsters here, that's the primary rebates that I've mentioned. If you're over 65, there's a secondary rebate, and then there's a tertiary rebate for over 75s, because there are some people that are still working at that stage. So I've only used our example, and because it fluctuates between people's ages, technically the tax threshold will be different for those three categories of people: under 65, between 65 and 75, and then over 75. So you can't change the tax bracket. It's easier to say, well, that's the rebate amount, and then you apply it to the tax table accordingly. Okay, so this is a very simple example just to show you that the payroll system will not only tax you on the 9 months you're working for the company. It will extrapolate that and say, right, for our 9 months, they're getting that. We assume for the previous 3 months, they would have been getting the same sort of income and the right tax would have been deducted. So that's to make sure that you fall into the correct tax bracket, because you don't want a case of now the payroll system working out incorrectly and then you have to pay in tax at the end of the year. The payroll systems will never work like that. So that was just to give you an idea of how the payroll system starts the calculation. So this person is earning a salary, they earn commission, and later on down the line, they've done so well in the year, they're going to earn an annual bonus, okay? So if you look at month 1, March, they got commission, a salary of only 5,000 Rand. They hadn't made any sales yet, no commission. What the payroll system does is it looks at the cumulative income. 5,000 Rand, 1 period work, the average income is 5,000 Rand, and it times that by 12 and says your annual income is going to be 60,000 Rand. It bases its calculation for the tax on the 60,000 Rand annual income. It has to work on annual income. Month 2 comes, but yes, now you're on a roll. You've earned 10,000 Rand commission. She sees the total income is 15,000, but the cumulative income for the 2 months now has been 20,000 Rand. It divides it by 2, says the average is 10,000, and times that by 12. So now it's going to do the tax calculation on 120,000 Rand. Tells you what the tax should be, sees what you'd paid the month before you were under the tax threshold. That tax threshold, you will see that 91,250, if you divide that by 12 months, 7,600 Rand a month is what it sees as being below the tax threshold. Okay, so you will see now why on your stipend income, you're not paying tax. That's under that 7,600 Rand a month, tax-free. Okay, so just bear that in mind when you see that 5,000 and why there wasn't actually a tax amount payable. That's under the 7,600 Rand. So there was no tax paid in month 1. Comes month 2, it says, right, the total tax payable for the whole year is going to be 5,175. What did we pay month 1? Nothing. And then what's going to be recovered over the next 10 months? And it only charges you the 1 month's tax. Although the payroll system has calculated now what the total tax for the year is going to be. Okay. Now, months 3 and 4. Your taxable income drops again because now you've only earned commission of 2,000 Rand. Again, it does the calculation. The cumulative income is 27,000 Rand divided by 3 months is an average of 9 months, 9,000 Rand times by 12. Now your annual income is expected to only be 108,000. So you were actually overtaxed in month 2. The payroll system will adjust for that and make you pay a lesser amount of tax. Can you see? It's quite complicated what the payroll system is doing behind the scenes to determine what your annual income is going to be. It keeps doing that. It keeps saying total income year to date, how many months have been worked, divide that, times by 12. And then it takes off what tax has been paid. You'll see in June, then he has a record sales month again. And again, the taxable income jumps. The average tax now is 14,000 Rand. The average income is 14,000. Extrapolate by the 12 months, 171,000, and it automatically adjusts what was paid before, what needs to be paid now, what's going to still be deducted over the years. Can you see? There is no way for a payroll system now to go say, okay, but now you're working on Zulu and you're working for One Up Consulting and you're Ubering. Can you see? Like, it really is quite in depth what the payroll systems have to do. Again, so you go down, you go up, you go down. At the end of the year on a payroll system, it would have calculated your tax 100% right. If you're earning income that will be on an IRP5, even though it's going to be more than the 91,000, but none of the companies, say you work for 2 companies, which is what our next example is going to be, you are going to get IRP5s at the end of the year. Don't register as a provisional taxpayer, even though you are going to have to pay tax in. SARS doesn't penalize you when companies don't tax you correctly, okay? And it's just more aggravation. You're going to have fees for submitting provisional tax returns. It's going to be an extra cost for you, and there's no reason. But what I want you to be aware of is that you need to maybe save. If your 2 sources of income, or your 2 companies that you work for, the total income of that per month is less than the 7,600, then you don't have to worry. You won't have to pay in.
She's getting 3,800 Rand every month for the internship, and then she goes to work for an international production, and let's say she's getting 2,200 Rand a week. Let's say 10 grand a month from the other production. But it's 2 totally different companies. How is she not then, how does that work?
Okay, so yes. So that is what I'm wanting to show you over example 3A, 3B, and then 3C. So 3A, we're going to be talking about company 1. Again, company 2 has no idea what company A is doing, and then our third part of this example is going to be how it looks in your actual tax calculation. So you're not going to be paying tax, the correct amount of tax in this example, and this is why I'm saying to you, rather start saving now. You've still got 6 months to make up for anything that could go pear-shaped in this year. And you don't want to incur penalties and interest. Make sure you submit your tax returns on time. Tax season opens on the 1st of July every year. Try and get your returns in as quickly as possible, and then you can avoid any penalties and interest on any underpayments of tax. Okay, so in example 1, we are looking at an individual who works Monday to Friday, 8 a.m. to 5 p.m. Has a monthly salary of 12,000 Rand per month and works for the full 12 months of the year. We're keeping it simple. And we're not taking into account items like UIF and that we're just keeping it to the tax part of the calculation. So again, we start with our actual tax calculation. Monthly income, 12,000 Rand. Annual income will be 144,000 Rand, which is 12,000 times by the 12 months. We look at our tax tables. That falls within the 18% marginal tax rate. You will be taxed 25,000 Rand, less your rebate amount, the primary rebate amount. The total tax that's payable on that is 9,495 Rand for the year. Right, the tax that's deducted every month from this pay slip is 791 Rand, and you will get a net salary of 11,208, blah, blah. Your average tax rate, that's what I want you to see, is only 7%, okay? Because your first 91,000 was free, and only the portion over that was taxed at 18%. So if you look at your total income of 144,000 Rand and the total tax payable of 94, your actual tax that you're paying is only 7%, not 18%, the bracket that you fell into, your marginal tax rate. You see, are you happy? Perfect. So this same individual now is going to be working for company B. Now he works 3 nights a week and Saturday and Sunday evenings. Okay? Salary is 8,000 Rand per month, slightly above our tax-free amount. Works for the full 12 months of the year. Again, annual income 96,000 Rand, which is the 8,000 times by 12 months, falls into the 18% tax bracket, and the tax thereon is 855 Rand a month. Look at the average tax rate is 1%, because you're actually only paying tax on the portion of the 96,000 minus the amount of the 91,000, whatever, that's tax-free. So average tax is only 1%. Now, this is what your tax practitioner is going to be doing for you at the end of the year. Company A is 144,000 Rand. Company B is 96,000 Rand income. Total income is 240. You now fall in the 26% marginal tax rates. The 26% tax bracket, how this little 40,000 part works, you actually take what the total amount is, the 240 minus 226,000, times that by 26%, and then you add the 40,000 because that is 18% of 126,000 Rand. So that's what those amounts are there. So you only ever have to work with the calculation. SARS has already added what the 18% is on the tax bracket above, or what the 26% is for that full bracket. So that's what those amounts are on the side. You are supposed to have paid 44,320 Rand on the 240. So 240 minus 226 times by the 26% taxable income plus the 40,000 from the 18% tax bracket minus your rebate. Please note, it is an annual amount, not a per source of income. So can you see payroll in company 1 did it right? Their calculation was right. Company B was right. Added together, you've now had 2 16,425 rands taken into account, and you only get one a year. So you are already short paid SARS by 16,400. Okay, everyone clear on that? Then you also owe more tax because now you're not in the 18% tax bracket, you actually fall into the 26% tax bracket. So those two companies that taxed you correctly according to their income to you is now not right. So you've been taxed on 18%, but you actually fall into the 26% tax bracket. So the amount that is still payable of 17,000 Rand, part of that is because the 16,000 has been taken into account from both companies. And the other part of the 17,000 is because both of those companies taxed you at 18% when you actually, some of that income fell into the 26% tax bracket. Okay. If you look at that total income, the total tax that would have been payable was 27,000. Divide that by the 240 total income, shows that the average tax rate for this person now is 12%. You are safe if you are going to fall within the 26% tax bracket with all your income together. You are safe to save 15% of your income. So of your stipend income, the 3/8, whatever, start saving 15% of that every month. And that should help make up for the shortfall that you are going to encounter when you submit your tax return. Let's say now you do have a rental property and you're earning profits as well. Again, taxable income is not just on remuneration. It is on all the income you earn. So if we use the same example of company A, company B, and now you add in that you're getting rental profits, I've used this specific example because now that's pushed us into the next tax bracket. Now we're actually paying a marginal tax rate of 31%. So again, the shortfall amount, now there's a total of 65,000 Rand that's still due in tax. Why? Because company A taxed you at 18%, company B taxed you at 18%, you didn't pay provisional tax on your rental income, and both companies took into account the rebate. So again, the amount that's still payable of the 55,000 Rand is due to 16,000 Rand being taken into account twice, both companies taxing you at 18%, where you actually fall into the 31% tax bracket. Your average tax rate is now 17%. So can you see between the 31% tax bracket and the 26% tax bracket, we've jumped an extra 5%. That's why I say if you save 15% of your income that's not taxed at the moment, that should be taxed, you'll be safe for your tax bill that's going to come in July next year. You're not going to be able to do this calculation yourself. There is a lot more. I'm trying to shove a 2-year tax course into a couple of hours for you. There are things that you can deduct from your taxable income. If you give to charity organizations like the SA Film Academy that can issue you with a Section 18A certificate, that reduces your taxable income. If you contribute to a retirement annuity or pension, that reduces taxable income. But in today's day and age, from what I can see, fewer and fewer people have enough residual income to be able to save towards pensions, RAs, so on and so forth. So there is very little that we can do to reduce taxable income except for saving for our retirements if we get there. You should be able to. So don't forget now, if you are working, and you need to consider if they're going to consider you full-time. Every company is taking into account the 16,000 Rand. So if you work for a company for 3 months, they would have taken into account that 16,000 for the 3-month period that you would have worked. You know what I mean? So again, it's quite difficult for you guys, especially because you're doing ad hoc work and you're here and then you're on that set and you're doing this. It's difficult for me to say that that's going to be exactly enough. It should be. So if you are going to land up being in the 26% tax bracket, so you are paying an average tax rate when you're in the 26% tax bracket of 12%. Okay? Do you get that one on example C, right? In example D, we showed that when you move to the 31% tax bracket, the average tax rate is 17%. So I'm saying if you had to land up in the 31% tax bracket, you would actually have to pay in 17%. Can you see that? So I'm saying by being in between that at 15%, you should have enough saved. Do yourself a favor. It is your legal right to request your payslips, and do it. Every month, whenever something is paid into your account, make sure you get your payslip. I'll tell you why. For some reason, and again, don't forget, I am a taxpayer. I am as frustrated with SARS and with having to pay tax as everybody else. I just happen to know how to do the tax calculation. So it is very frustrating that SARS is not on the side of the innocent party, and they are always, oh, that's too much work and you can't prove it. So now my question is, and I get it from SARS's point of view, if you say, well, there's my bank statement, you see what amount came in, they say yes, but how do we know that the person, you weren't just supposed to get that? How do we know tax was deducted and just not paid over? Without a pay slip, you have no proof. You have no proof that you should have got 12,000 Rand, but you only got 10,000 Rand in your bank, because you can show your bank statement as proof, but that doesn't prove that tax was deducted from you. A pay slip does. You can then go to SARS and say, right, I didn't get an RP5, because you should be getting RP5s at the end of every year from every company that you've worked for during the year. So whether it was 2 months, 2 weeks, whatever it was, if you had PAYE deducted from you, or UIF, or anything like that, you will get an RP5. And don't let people tell you, it's going to be on your tax return, I don't need to give you a copy. Nothing. I was going to say something more favorable there. Because if you go to your tax practitioner and you say, no, I've got, I think 5 RP5s, that tax practitioner now has to wait for the 1st of July to be able to pull your tax return to be able to do the calculation. Whereas you send the person the RP5s beforehand, I've got all the information I need, I do the tax calculation, I give you the information, you know what you're going to be in for. Now, if you have to wait for the first just because people don't want to give you your RP5s, which again, you are legally entitled to, you need to get a physical copy of that, electronic copy. You will be able to see from that if it's been submitted to SARS. So you'll know immediately. But again, if you don't get the RP5, but you've got your monthly pay slips, you can go to SARS and you have a better leg to stand on to say, look, these are the amounts that came into my account, and look at my pay slips. They deducted the tax from me. It is still going to be a very, very hard job. Okay, let's go back to some of the admin items with income tax returns, okay? That campaign I was talking about where SARS says to you, you don't need to submit your income tax return if you don't have a travel allowance, blah, blah, blah. Submit your tax return. Don't wait for their automatic assessment. You go in and you make sure your tax return is submitted. Because what we are finding now is that SARS is coming back 5 years down the line and saying, here's admin penalties of 250 Rand a month for outstanding returns. 250 Rand from the date it was supposed to have been submitted to the date you actually submit. So now you go back to SARS and you say, but you told me I didn't have to submit a tax return, and they'll come up with some example and say, no, this is why you should have submitted. Submit every tax return regardless of what SARS says. Just trust me on that one. So admin penalties, when you don't submit an income tax return, is 250 Rand per month until the return is submitted, per year. So if you owe 3 tax returns to SARS, every month that it's outstanding, that's 750 Rand that they are charging you. They will take that admin penalty off any refunds due to you. They are very clever at doing their journal entries. Okay, taxable earnings is the actual income that you earn, all income. Interest income, rental income, all forms of income. Let's actually go back to that one. Pension income, investment income, dividends, any policies that you might have. If you do a business and you trade as yourself, any taxable profits that are in that, that all together becomes taxable income. So the tax paid is the amount that you need to pay, the income tax that is payable on your taxable earnings. Okay? When a company deducts that from you, from your payroll, from your pay slip, or from your actual income earned from a place, that's referred to as PAYE, but it's still income tax. It's the same thing. It's just deducted from your employer. It still forms part of your income tax that's due, though, on your taxable earnings. I would suggest that everyone goes and registers on e-filing yourself. Even if you've got a tax practitioner, have your own profile so you can go in and see any correspondence that SARS sends you. There's no more this, I didn't get this, because SARS has ways and means of saying yes, but you did go into this correspondence, that kind of thing. So make sure you have your own profile and you have shared access with your tax practitioner, and make sure when you pull a statement of account on your profile that there are no returns outstanding. So you would need to go back and say, okay, well, I need to submit 2009, 10, 11 and get them in ASAP. It's like actually your first thing that you need to do. Register for the Mobi app, check your statement of account, see what SARS says that you are outstanding in tax returns, and get them submitted. The automatic import of the RP5s onto tax returns has been going on for more than 10 years now. So that information should be there. What's only started happening the last 3 years or so is the interest earned from banks and medical aids and third-party data like that that's been pulling through. But again, if you don't have that information, at least submit what you've got. Okay. So now, you don't need to register anymore as an individual taxpayer. Your companies will do that. So let's say Joe Soap just leaves school, walks out and goes to get a part-time job. The first place that he works for that he gets a pay slip will register him for income tax when they submit the first round of RP5s. So payroll administrators, we submit RP5s in August. Well, up until the August period, we start submitting that September, October, and then the February RP5s, which is the final RP5s that's going to go onto your tax return. The mid-year one is just kind of like a recon, make sure everything's in order, that you've paid the right amounts to SARS. The February one is the final one, and that starts in May and June. No, April, May. SARS gets their stuff together in June, tax season opens 1 July. Okay, so now, in conjunction with us sending through the RP5s for the individuals that have worked, banks are sending through the RP5s directly to SARS, or the RT3Bs on interest earned. Medical aids are sending through medical aid amounts to SARS. So all of that information is going directly from the third party to SARS and being put on your tax return. Okay. You will not have to register as a taxpayer, but make sure that every time you change cell phone address, you notify SARS. You can do that on your profile once you've got your SARS Mobi app downloaded. Make sure you always update your details. Because again, it is actually written in law that within 3 months or whatever stupid amount they've chosen, you have to update SARS. And if you don't, then you are liable. So if you say, I didn't get anything, and your details are wrong, they can turn around and say, well, you didn't let us know. It's not our fault you didn't. I'm just saying, don't register for provisional tax if all of your sources of income are on a pay slip or from an actual employer that you're going to get an RP5 from. Because SARS will not penalize you for underpaying because you fall into different tax brackets because of that remuneration. However, if you earned rental income, you would register for provisional tax. If you were a sole proprietor and Ubering at night or whatever, you would have to register as a provisional taxpayer. So basically, when it comes to income tax, that's tax payable on all your taxable income, okay? Now, when you earn remuneration such as salaries, wages, bonus, overtimes, blah, that information is taxed by the companies that you're working for, and that's referred to as PAYE. When you're earning stuff like rental income or Ubering income or any other form of income, that's not from an actual employer. Nothing is being paid to SARS, and that's why you have to register for provisional tax. But it is still income tax. You now only have to pay that at the end of August and at the end of February. So when you do your August submission, you have to estimate what your taxable income is going to be, and you're paying in August for the year ending the next February, okay? Now, if you think of your salary income, you would have been paying March, April, May, June, July, August by that stage. So basically your payment is in August is an estimation of your taxable income, but it's actually only for half the year's tax. So you're prepaying it for the year end, but you're actually post-paying it for the periods that it was earned in, if you know what I mean. So you are paying in August for the income earned March to August, basically. So it's a prepayment of tax instead of waiting till July next year, and SARS is very good at that. They will charge you underestimation penalties. They will not charge you those underestimation penalties if you're short paid just because of salaried income. But if you earned rental income and now that goes on your tax return and you didn't pay provisional tax, they will penalize you for underestimating. They will not do that when it's because of the different tax brackets that you happen to fall into when all your income is taken into account from an employer that you don't have to register for provisional tax. Is that clear? So just when you're having multiple sources of income, but it is for an actual employer and you're going to get an RP5, you don't have to register as a provisional taxpayer. If you're earning the taxable amount of interest is still $23,800. Only when you're earning more than that in interest a year would you have to register as a provisional taxpayer as well. So it's any income that you're earning that you're going to have to pay tax on that is not taxed by an employer. Then you have to register for provisional tax. And you will make 2 payments a year in August and February. That's kind of like your prepayments instead of only submitting your tax return in July and then having to pay all of that tax then. So they're just trying to get their money in earlier, basically. Okay, so the provisional taxpayers, it is on your notes. So if you haven't got notes, then just ask for them. We did do these slides. Again, so it's a prepayment of tax for that year under the review, and they made August and February. What you guys can do, and I know some payroll administrators, just because it becomes a bit of a nightmare, but if one of those employers that you work for is approachable, maybe a smaller organization and a little bit more open to these kind of things, you can actually ask for an additional tax deduction. If you know, okay, I'm earning rental income or you know, I know I'm going to have to pay in now because this income isn't taxed, but you know, when I add it to that, you can go to them and say, please, can you deduct an extra 500 Rand a month for me? It'll be paid on your behalf to SARS. It'll be on your IP5, all legit, if it's for companies that are actually deducting your PAYE and giving you pay slips. Point one. You can then start prepaying that tax to SARS that you know you are going to have to short pay by asking the companies to do that extra tax deduction. You do have to do it in writing though, because companies are not allowed to do additional tax deductions unless you ask for it. But you can do that. If you're not good at saving, you can ask one of your employers to rather deduct the additional tax for you. And then if you have overpaid, it will still come through on your tax return, and then you'll be due a refund. Okay? Perfect. So yeah, the most important things to remember is your tax year is 1 March to 28 February. The rebate amount, that it is only once a year, not per source of income. The tax threshold, which changes every year, currently for this year, 91,250 Rand. That's not taxed. Your marginal tax rate, is coming up on that screen or that screen as well? No. Your marginal tax rate is the tax bracket that you fall into, but the average tax rate is when you look at the total tax that's payable for the total income, that gives you your average tax rate. If there is a link in any phishing emails, don't click on it. If they are threatening, don't open it. SARS, although painful, they do not use, we're going to blacklist you and the what. They say this is a final demand, etc., etc. Log into your profile. Anything that's got a link to it that says click here to update this, no, definitely not. And also always check the email address. It'll always be from sars.gov.za, not pitpompis something. No, really, I've seen some crazy email addresses come through and they're like, is this real? It's so easy to take the footer of an email that you've gotten from SARS before and then just create other things. You can't change the name of the email address that you're sending it to. And let me just tell you, talking about that, it's not actually just SARS. SIP-C, when you register a company or you submit annual returns, you have to register on the Companies and Intellectual Property Commission's database. They will send out information, and that comes from sipc.gov.za. I got an email the other day. Also, it was a click here to log in or something like that. And I swear there was one, instead of it being CRPC, it was CRCP. Nobody would really check that. You know what I mean? So just be careful. Don't open anything that's got a link to go anywhere else, because it's not just SARS. So it's now happening with a lot of government organizations. Again, so this comes back to my admin penalties that I was telling you about. And that's why people go gung-ho, let's start a business and let me register and get bank accounts and everything else. But you don't realize what all is involved. So when you register a company now with SIP-C, it automatically talks to SARS and it automatically assigns you a tax number. Now that company doesn't trade. Every year, SARS is expecting a tax return and will charge you 250 Rand a month until the tax returns are in. Submit 0 returns immediately.
So when
You can actually tick on the box when SARS asks you the questions on the wizard. It will say, did the company trade? Is it dormant? When it says, is it dormant, you say yes. And then the rest of the form you don't really have to complete. It will say, why isn't it trading? And you just say, in preparation for future things. But get them in. Later on down the line, you are more protected as a company, as being the director of a company, any liability issues, that kind of thing. And certain things you don't want in your own personal capacity. So the tax threshold for VAT is R1 million. And I know it sounds like a lot, but you actually get there quite quickly. You don't want to have to register in your personal capacity for VAT, that kind of thing. It's easier to keep it separate. Do you know what I mean? And especially when you're employing other people, you don't want to be the employer of those people. And then also, it's easier to juggle between what tax you're earning in other forms to what salary you're going to draw from that company necessary. You know what I mean? You might have other sources of income and not just that kind of thing. You just are more protected. In a company, there's no longer closed corporations unless you buy an old closed corporation. But you are more protected as a director in a company than you were as a member of a CC from public liability. Somebody has to prove that you traded very recklessly before they will be able to attack the director in their personal capacity more than the company. So you are more protected. If you rang up a bill now somewhere, they would come after you in your personal capacity as a sole proprietor, but the first port of call for a company, they would attack the company first, and only if they could prove gross negligence, then they would come after the director. So your personal assets are safer when you've got a company. You have to be very careful with that. Okay, so our wonderful SARS and the big brother watching us. SARS gets information from company bank accounts and individuals every quarter. I have literally had a tax client who transfers money from her mom's account into her account because her mom has dementia, and she pays her mom's accounts from her account. SARS has seen the transfers in from her mom's account into her account as income and reassessed her. It's now our job to go and fight and say, but that's not actually income. Okay, so be very careful thinking that you're getting away with things because it's in another bank account. Whether it's company or individual, that bank account is being monitored. So now if you go to SARS and you say that company is not trading, they're going to say, well, why is there money coming into the account? Why is there money going out of the account? So be very careful with that. Don't forget that all company bank accounts are linked to the company registration number, and all personal bank accounts are linked by your ID number. SARS knows about these things. Unless it's literally cash under the counter, there is no way of getting away from SARS. They know about everything that's going on. I don't know if you've seen in the news now about the income audits and people who buy cars. That's always been a thing, but now they're focusing on it more. If you're declaring you only earn 100,000 Rand income, how come are you living in Big Bay? Why are you driving a Ferrari? So on and so forth. So SARS is starting to put the blocks together, and a lot better than what they were able to previously. You cannot get away from what you owe. So make sure things come into your account and make sure you declare everything that needs to be declared. I'm not saying you need to pay tax on all of that. Think carefully about what expenses you can offset against income. Unfortunately, for people earning salaries, there's very little that you can do. When you're a sole proprietor and you are earning other forms of income, or if you're earning commission, there's a lot more that you can claim expense-wise, like cell phones. You're allowed to claim 80% of your cell phone when you're an individual contractor. Data, you're allowed to claim 80%, etc. So I'm not saying you just have to declare the income. Think very carefully about what expenses you can take off that income, but declare it. Definitely don't try not to declare it. SARS has become very, very strict with home office claims. You really do have to fight as a salaried employee to try and get home office expenses allowed. It has to be used solely for the purpose of work. It has to be kitted out exactly for that. You cannot have a spot on your dining room table and say, that's where I work from, that's my home office, I'm going to claim for the dining room expense. It doesn't work like that. And SARS does actually check. SARS has gone into people's homes to check. I had one client, they went into their home to check, and there happened to be a TV on the wall. Not a couch, not a nothing. Office set up, but there was a TV and they disallowed the claim. Okay. It has to be set up solely for the purpose of work. Printers, desks, etc., etc. You cannot even have a couch. I had one client try to tell me, but my clients come here and they sit on the couch and meet with me. No, SARS will not have it. It has to be solely for the purpose of work. Then you would have to apportion your expenses for that. So if your total flat is 100 square meters and that room's 20 square meters, you have to take into account the rent that you pay for the whole place and then apportion it according to the size of the actual office. You can claim that. but let me tell you, SARS is making it very, very difficult. Each year, whenever you submit your tax return, tax practitioners are always surprised about what SARS has chosen to target in that particular year. So for the last couple of years, travel allowances were big. If you had a travel allowance, I used to want to send you to other tax practitioners. But anyway, this year, or last year, it was also medical aids. This year, medical aids and charitable donations, like as if there aren't bigger fish to fry. Every year, they pick something else where they've seen there's a gap or where there's risk or where people are declaring things that they shouldn't be declaring, and then they start targeting on that. And then it's a blanket case on all tax practitioners who happen to have that risk factor in their tax return. Then you'll be selected for verification. You'll have to submit supporting documentation, and only once that verification is finalized will any refund that's due to you be paid out. It just delays the whole program.
Welcome to this video that will show you how to submit your income tax return on the SARS Mobi app. You must be a registered e-filer with a valid username and password to use the SARS Mobi app. Tap on the Mobi app icon on your device. Tap Login. Enter your username and password. Then tap Login. Tap Tax Returns. You will receive a pop-up message saying that your income tax return is being generated. You will now be taken to the form creation wizard. Read the message carefully and check that the tax reference number and the year of assessment is correct. Tap OK. You will have to complete the wizard so that your return can be created. The sections are color-coded. If a section is red, it means you need to provide information. If it is blue, it means you have supplied all the information required. Complete all the required information. In some sections, the fields will be pre-populated. Check if this information is correct against your supporting documents. If a section is red, it means you need to provide or confirm information. Once you have completed a section, you can collapse it and move to the next one. All sections will be blue once you have correctly completed the return. You are required to declare any additional income, such as investment income or rental income. In the deduction section, check that all information is correct. If anything is missing, please add the information. Before you submit your return, you can make a tax calculation based on the completed return by tapping Tax Calc. When you tap Tax Calc, your return is automatically saved, and you will see the results of your calculation. If you are sure that you have completed your return accurately and honestly, you can tap Submit. However, you can save the return and work on it later. To save the return, tap Save. Just remember that if you tap Save, your return is not submitted to SARS. You will have to go back and tap Submit for it to be sent to SARS. Once you do that, you will see that your return has been successfully submitted. Tap View Assessment and follow the prompts. You are now able to view your assessment. Thank you for filing your return via the SARS Mobi app. SARS at your service.